Did you know there were 5 different types of loans for first-time home buyers? Well, if you didn't, let me explain about the 4 most common ones and the one that isn't talked about that often. Stay tuned. Hello, welcome back to my channel, Limitless Real Estate. My name's Liana and I am here to bring you valuable real estate content on your journey to home ownership. So for today's topic, we're going to talk about the 5 different loans that are offered to first-time home buyers. We're going to talk about 1, how to qualify, and 2, the stipulations behind each of these loans. So let's get started. Little disclaimer, if I am looking down, it's because I am looking at my notes. But for the very first loan we're going to talk about today, we're going to talk about conventional loans. Conventional loans are very common. Most of the time, first-time home buyers will be saving up their 20% down. But the cool thing about conventional loans, you can go from 3% down to 20% down. So depending upon your credit score, which 620 is the minimum for conventional loan, the higher your credit score is, the lower your down payment has to be. And it can get you all the way down to that 3%. Another thing about conventional loans is to qualify, you need to have at least 36% or lower when it comes to your debt to income ratio. So those are the cool things about conventional loans. They're very common. Usually quite a few first-time home buyers go that route versus the federal backed loans, because with conventional loans, there's not a lot of stipulations and there's not a lot of rules because they're backed by private lenders. So that is the first loan. So the second loan that we're going to talk about today is the FHA loan, which is a Federal Housing Administration loan. So this loan helps a lot of first-time home buyers because you only need 580 as a credit score to qualify for this loan, as well as you only need 3.5% as a down payment on the home as well. Versus the conventional loan. Now, what I failed to mention in the previous loan is that anything below 20%, you're going to have to pay this thing called PMI. What is PMI? PMI is private mortgage insurance. It's basically something that you, the borrower, have to pay as a protection from the lender just in case you default on your mortgage. So it's just a protection for them because they're taking a risk by giving you the chance to get a lower down payment. When it comes to PMI, with conventional loans, after a certain amount of years, the PMI usually falls off. When it comes to federal backed loans, the only way that you can stop paying the PMI is if you refinance and get a completely different loan, you move, or you just pay your mortgage off. So yes, and majority of loans, quite a few of the loans come with a PMI as well. So yes, on to number 3. Loan number 3, and it is the best loan, best deal you will ever possibly see. And if you qualify for this, I really hope that you take advantage of this. So the third loan is the VA loan. It's only offered for veterans and service members. It requires a 0% down payment, as well as you do not have to pay PMI. So after closing. So that's a pretty good deal. Anyone that is a service member or a veteran, please, if you're ready for home ownership, you have a huge advantage. You can literally get what you want and, not really having to pay a lot out of pocket up front. So definitely best deal. Also, thank you for your service, but you guys are getting an amazing deal when it comes to VA loans. On to number 4. So the next loan we're going to talk about is the USDA loan, and that they are backed by the United States Department of Agriculture. So for this loan is dedicated to low to moderate incomes, And the places you'll have to go, they have a certain area where you have to stay, and it has to be a rural area. There is a 0% down payment for these homes, as well as a low PMI, which is factored into the loan as well, or the mortgage. So for these loans, it's basically to just kind of help certain areas in different cities grow, and to, you know, put people more in that area or certain areas. So these I think are great loans if you are not wanting to rent anymore and you're, you know, wanting to look for a home that's maybe more permanent, or even going into something that you may not stay in that long that could turn into some investment. So definitely look into that. It's very interesting. You only need a 620 credit score. And like I said, the PMI is typically low when it comes to the USDA loans. So it's definitely something to check out. On to number 5, and the final one that is not talked about a lot. Sorry, I didn't notice how relaxed I was in the last slide. But for the final loan, and the loan that I don't think gets talked about enough, is the FHA 203K loan, also known as the rehabbing loan. So essentially, this loan is where the lender takes the purchase price of the home and then combines it with a certain amount of money to rehab the home. So for instance, if you find a 150K home that's a little beat up and, you know, just needs some love, lenders are willing to give you up to a certain amount, just for instance, 50K, to rehab the home. And so that when they'll bundle it all together, and so you only have to pay one mortgage for both of these loans. So to qualify for this loan, you have to have at least 500 as a credit score. Yes, at least 500 as a credit score. But the thing about that is, when you have between 500 and 579, you're going to have to pay a 10% down payment. Whereas if you have 580 and above, you can pay as low as 3.5%, which is the usual for an FHA loan. So yeah, so those are the cool things, but you're going to have to still pay a mortgage insurance. So that will also be tied into the loan as well. So that's a pretty cool loan, especially if you don't really want the competition, because a lot of people want homes that are, you know, already nice or already put together, don't need a lot of work. If you are a fixer-upper, or you wouldn't mind getting a fixer-upper, you should definitely see about getting qualified for this type of loan, because the great thing about it is, if you're rehabbing the home and it's not in a livable state, the 203K loan can cover those mortgage payments while the house is being rehabbed. So keep that in mind when you're thinking about jumping into this market. Are you willing to be patient and, you know, build a house, or, you know, rehab a house that may be up to your standards and how you can imagine your first home? It's a good thing to think about. So I want to say thank you for tuning in to today's video. I really hope you enjoyed today's content. If you have any questions, or if you have any comments, if you like the information, or if you want to tell me something different, please let me know down in the comments. I will love to hear what you guys have to say. I can't wait to post on Friday. Our Fridays is going to be a home tour segment, so please get ready for that. Also, let me know what kind of price range houses you want to see, because there's so many beautiful homes in Orlando and there's just so much to see. But please let me know which ones you would like to see. Thank you so much again. If you like my channel, you like the content I provide, please subscribe, like, and share. All right. Have a great day. Limitless out.